Today, I'm going to learn how to trade cryptocurrency in under 30 minutes. I hired my friend Noah to teach me exactly how to trade cryptocurrency, and I recorded the entire thing so you can learn too. He also walked me through my very first crypto trade, which we got it all on video, and it was a banger. That will be at the end of the video. So make sure you lock in, get a notebook, and learn alongside with me. If at any point you want to trade alongside Noah completely for free, all you guys need to do is click the first link down below and join our Discord. Once you're in our Discord, all you have to do is sign up to BitUnix using our referral link, and you will get full premium access completely for free. Trade signals, trade live streams, and all of our crypto education. So if you want Noah to hold your hand through your first trade, click the link down below. Alrighty, let's get on to the video.
Teaching the reversal strategy, how to catch reversals, pretty straightforward. We're going to separate this into 3 parts. Step 1, step 2, step 3. That's all it is. Step 1 is going to be spotting the shift, which in order to do that, you need to know what a change of character is, which we're going to break down here as we see a line right here. So if you are in an uptrend, you're getting higher highs, higher lows, all the way up, right? So as you see right here, higher high, higher high, higher high, same thing, lower high, lower high. So now that we can say that we're in an uptrend, we can mark out the most recent low right here. So what a change of character is if this trend comes down and breaks below this and closes below the low right here. So let's say that candle closes all the way down here. Right here would be our change of character, stating one of two things. We're either grabbing liquidity and going to continue on its trend to the upside, or, which happens more times than not, is we're going to be entering a new market structure, whether that be a range, which is sideways markets, like this, or we could be entering, whoops, hold on, let me go back. What the heck? Okay, that's fine. Or we could be entering a downtrend with lower lows and lower highs all the way down. But it's not a break of structure or a change of character until we get a candle to close below this line. Because if we just wick it without closing, that's not a change of character. It has to close below the lowest wick point here in order for it to be a change of character. Now that we know what a change of character is, break of structure will be easy. So a break of structure is every time we break above this most recent high in an uptrend. So every time right here would be a break of structure. Every time. Those aren't as important because what we want to look for is a change of character, which is going to be breaking this low.
Can I ask you a
right
question?
Here. Yeah, what's up?
Does it matter what time frame this is on, or is there a specific
No.
time frame? Okay.
No time frame whatsoever. This is on any time frame. This is just basic charting.
Okay.
So we're going to be looking at it on the 1 minute, which I'll get into here shortly, but a change of character and break of structure will happen on all time frames at any time frame. So now we can go down here and we can see just that kind of playing out. So if you see, we're in an uptrend here, getting break of structures every time we take the highs, and then we don't get a change of character until we get a candle to break this high right here. Because what determines a low or a high is a red candle and a green candle is a low, and then a high is a green candle followed by a red candle. That's a high. Does that make sense?
No.
What's like confusing
Oh,
you, I guess?
so you're just saying that.
Like what forms a high and what forms a low?
Um,
It's either what forms a high is one green candle, one red candle.
okay.
What forms a low is one red candle followed by a green candle. So we can see right here that we have a low. As soon as price closes below this low, we get a change of character because this is the most recent low that we can see there. Now, let me go back here. This trade is going to play out, bro. It's going to happen while I'm filming. So now that we know what a change of character is, we can cross that out I probably hear me out. This is off camera. I probably don't need to go through these quite yet. Right?
I don't know. Whatever you teach me.
Okay.
If I need to
I'm
learn
kind of more
it,
thinking
then
video. You will eventually at the end though, is what I'm kind of thinking. So I'm gonna continue doing this. So what the strategy is on a whiteboard is right here. So we're in an uptrend. We like this strong uptrend that we have. We get our change of character right there. So we're going to be in an uptrend right here. Let's say about right there. This is the uptrend. We get that break of the trend line and that change of character right here. So the next step we're looking at is we want to see imbalance, which we get because we're breaking that trend line, that uptrend, as well as getting our change of character right here, which is going to be needing to create fair value gaps on its way up, which a fair value gap is the partnership between 3 candles. I don't have my slide open, so I'm just gonna come down here and show you what a fair value gap is.
Wait, Noah, can I ask you a question?
Yeah, what's up?
So, look at my screen because it's not gonna ruin the video. Look at my screen right here. Is this candle right here
Hold
that
on.
almost looks like a doji candle? This candle right here, my cursors, is that the break? Is that the change of character right here? Because
Yeah,
when I look at it,
yeah.
I look at this as the change of character because it's lower than this.
Yeah, you so that's more of the strong one there once we get that break of there. But I like how you're on trade. Um
This
it
is
would
from
be right
days
there.
ago, bro.
Yeah, I know. You're up 83 cents.
But like the
Yeah,
way
it'd
you're
be the
teaching us,
break
it
of
would be
there.
this candle right here.
Because you see how it created a new low right there and tried to push higher, and then we fell through it, which would be the change of character. So if you look at my screen right here,
Yep.
that's the change of character. I personally, so this is why these could be messed up. I would say this is the change of character, this candle. Because I would have this be the most recent low.
so
Okay.
think of it as backside, AJ.
Yeah.
Okay.
So
All
right
right.
Like
there
it's
would be
breaking
the
the
low, and
backside
that'd be
level.
the change of character. I'm gonna turn this off real quick because they are wrong occasionally. So that's why I don't always use them. It just helps for like easily looking at it. Like this one right here would be the change of character. So we're in our uptrend, right? Okay. We can see that we're getting higher highs, higher lows, break a structure every time we're breaking those. And then if we look right here, we get our change of character right through here. Once we break below there, change of character. And then let me just draw from this one right here. And then we get the bounce at the trend line and then fall right through it, which is giving us that break of trend line plus our change of character that we got. We now are showing signs of a reversal. Okay. So that's more of what that is. So if we come up to our drawing over here, and I'll redraw it so it looks a little cleaner. Right here.
When you say character, what are the characteristic traits? Well, it's going up, it's going down, it's going sideways. In theory.
Yeah, those are the 3.
Okay.
So if we look right here, we're in a strong uptrend. I mean, we're getting it bouncing off this trend line multiple times. And then we get our change of character plus trend line break. The next thing we're looking for is, again, fair value gaps. So that's what I was doing down here. Which a fair value gap is a partnership of 3 candles. So you have a bull and you have a bear fair value gap. So let's take these 3 candles right here. So this big candle is in the middle, and then followed by these 2 smaller candles on the side. So you're going to take the difference between the wicks of the 2 outside candles, and that is going to be showing a fair value gap right there, showing that there's more orders on one side or the other in this area. So in this case, there's more buyers than sellers in this area, showing that when price returns, it's going to be still left orders to the buy side here, showing that when price returns, it's going to fill those buy side orders and continue on its trend. Okay, so like you can see, price currently is struggling to break this level because it's still filling orders from this huge placement right here. So every time we're returning into this, we're bouncing out of it.
So that's
Because we're
because there was
extending it.
people that didn't get filled, so there's still open orders in the order
So
book down there. Is what you're saying?
exactly. Yep. So when price returns through here, it's showing that this range right here, people are wanting to. There's a heck of a lot more buyers than sellers in this area. In a sense, there were no sellers in this area, just straight buys. So it skipped over a lot of orders in this push up. So when price returns to
Mm,
fill this imbalance, you have market makers wanting to fill these orders before continuing up. So when price returns, it's going to be filling a lot of those orders that were left behind in order to bounce it back
could you
through.
draw another fair value gap previously in the chart? I'm struggling to
Yeah,
identify them.
right here is a negative one. This is going to be a sell to the sell side, because if we look, we got candle one, which is this doji. You get this huge boner candle in the middle, followed by this third candle right here. So you're going to take it from the bottom of this first candle to the top of this second candle, and that gap in between there, where price never touches in these three candles, is going to be major sell orders in there. So again, you see it try to enter back up into here and it sells off. Now, when we did get back through here, you see now that orders flip to the other side. So now you see the one that we were just looking at. Now it flew right through because there were no more sellers in this area. They all were getting filled in this wick here,
Okay,
and
so
they're
if
now just off the table.
if two fair value gaps cross over each other, the one that would then be more dominant would be the most recent one.
Yeah, most recent one. And it also just shows a really big area where there's lots of orders on one side or the other. So it just shows you a really key area pretty much. So
Okay.
more times than not, you're gonna let's start with this one. I would still keep this one because now once we get a close above it, because again, there's tons of sell orders in here. So once we invalidate it and close above this fair value gap, this negative sell side fair value gap,
Mm,
this fair value gap now becomes positive. Does that make sense? So once we get a
mm.
candle to close above it, a sell side fair value gap, it now invalidates it and becomes an inverse fair value gap, showing that there's more buyers now in this area than sellers because we just ate up all the sell orders. So now there's
Mm.
only buy orders in this area. So now when price returns back to it, boom, we
Okay.
push off. That's why this is such a strong area, because we kind of have two fair value gaps showing one's negative, one's positive. We get a close below it, so now they're both positive. Now this overall move is positive right here. And as you see, we're struggling to break it currently. Does that make
Would
sense as far
you?
as a fair value gap goes?
Yes.
Okay.
So when you draw your fair value gap,
Mhm.
back the positive one right now, it's kind of bouncing in. Would you consider taking longs in that area or no?
No, because that's not the strategy quite yet. So if we
Okay.
look,
Okay.
the ones we would, so this one is just a good idea to see where price is going to bounce off of, but you see we're in our uptrend here.
Mm-hmm.
We get our change of character, break of our trend line. Now this is what we want to see is displacement, breaking the change of character and breaking this trend line, which displacement means fair value gaps. It means it's creating fair value gaps. So we got one right here. We got one right there that I already have drawn. We have another one right here. All these are fair value gaps that it creates on its big displacement move. Out of this huge uptrend, we finally get that break showing signs of a reversal of the trend. We get major displacement because we want to see price separate itself from this uptrend, showing
Mm-hmm.
that price is overextended and wanting to create a new trend. Okay. So if we go back up to this easier to look at one, this displacement move, we want to see fair value gaps. And after we see fair value gaps, we want to see price snap back to these levels, fill the fair value gaps, and you might be asking yourself, well, what fair value gap do we trade? There's going to be multiple fair value gaps, right? So how to find the fair value gap that we want to trade is we want to take the swing high to the swing low with your Fibonacci. In the settings for your Fibonacci, you're just going to need 0, 1, and 0.5. Just three of them. And you can have them all be the same color like I have. All this is spotting is the 50% level. Because what we want to see price do is we want to see price pull on back more than this 50% level. We don't
Yep.
want to take a fair value gap down here. We want to see price
Right.
have a pullback because we want to be shorting at a premium.
It's
We don't
very
want to
similar to
be
stocks in
shorting
that
it.
regard.
Is it? Okay. So we're gonna want to trade any fair value gap at or above this 50% level. So when price returns into the fair value gap at or above this 50% level is where we're looking to take our trade, and for price to respect to take out the lows right here that we just created, because what is that telling us? We're entering a new trend, because now we got a higher or a lower high and a lower low. So as soon as we get a lower low, we're going to be moving our stops to complete break even and letting this trade play out.
Could you go
So-
back to the price action right now?
Yeah.
And could you just draw that up for us real quick?
Yes. So we see we're
Yeah.
on our uptrend. It's a
Mhm.
pretty solid uptrend. We see it changing character, breaking this trend line. Now it gives us 3 fair value gaps. So it actually gives us more. There's 4 right there, but that one's long gone. So what I'm going to do is I'm going to draw it from the top to the complete bottom, which would be right here at this one. And this is going to be telling us what fair value gap we should be trading. So right here, this is giving us only 2 fair value gaps that we can trade it out of. The one that it's approaching. So we can go ahead and delete this one because it's not at the 50% level, just for easy math. It's approaching the one that we could be taking our fair value gap out of, like let's say right through here. Now, the thing I don't like about this one is how far we are from retesting this trend line. And also a lot of consolidation. But this is saying look at the difference between the 50% level and the 50% level on the fair value gap. You want this green line to be at or under the 50% level
Okay.
of the fair value
Okay.
gap.
So that one would almost be void as well.
It would and it wouldn't. I'd probably consider it if
The
this was
small
cleaner.
size.
It's just not clean right here.
Okay.
Like this consolidation and chop grinding up, constantly getting rejected out of this one, finally breaking above it. I'm just not a huge fan of it. I could see myself 100% taking it
What about
if
the
it
top
did
one?
this sooner. So that's kind of like another one you could possibly look at. I want to refresh it here. Top one's not bad. I just, again, now you're flirting with it wanting to approach the highs again. So this one had a lot of chop beforehand. Now, if we came up and retested this same one right here, I would have definitely taken it.
Okay.
But we've kind of like revamped a little bit.
Yep.
I will say this top one's not a bad one that I would definitely look at because A, it's an inverse and a normal fair value gap, kind of at that same level. I have to see it on here to be honest, because like see how this is different? Like this exchange is different. It doesn't show the fair value gap because there is no fair value gap on this one.
There's not.
Wait, I
It's
have a
trippy.
question. You said
Yeah, what's up?
you for
How about I go to
in
one that
order you
actually
said
did
in
play
order
out?
for you to take it, you said you wanted it to be above.
The
You wanted to
50%.
break through that fair value gap at the 50%, or you want
Not
it to be
break through
under
it.
or at.
You want it to you'd put your order right at it. So let me find one that did play out.
Oh,
Like
it's approaching that fair value gap.
that top one.
Yeah.
So see how there's no fair value gap on the actual exchange here though, which is weird. It shows that there's no gap on this
Huh.
one at all. So in a sense, this is where we could be taking it. I'll take 25% maybe.
I'll take
Just
small
yeah,
size just for
just for the educational purposes. I
yeah,
already don't
just
like
to
this
learn.
though on how it's displacing up to it also.
Barreling through it. Oh.
But you got to wait for the close. We still got 25 seconds because again, it could
Where do you see
come
your
all the way up here
time?
and
Your
close
timer.
right on the right here.
Oh.
So I'm going to
Okay.
take a 25% short here just for the sake of the video. I got to refresh. It didn't pop up.
And our stop loss would be
It's going to be a couple ticks above the fair value gap producing candle. So if this is the fair value gap we're wanting to trade here,
yeah.
our stops would be a couple ticks above the actual wick and candle. So my stop loss on this one would probably be above. It would probably be right here.
And when you say ticks,
Now,
what do you mean with that?
this should be a couple ticks. So realistically, you could put your stop loss right here. But since this wasn't a clean setup and we want to risk we're putting on a little bit more risk. Does that
What's
make
a
sense?
tick?
Like there's no really true thing, just a couple little ticks like every time this moves, above it. So I would probably just, move it a couple ticks above. Pretty much where price is, like right here. That's if this was like a really clean setup. Trend line would have to break in order to get to your order. But you want to put it a couple ticks above the fair value gap producing candle or at key levels. So there's very big difference between those. So like for this one's sake, we're putting it right at a key level. We see price respecting this level multiple times in the past. So we're putting it right above that key level, saying if price breaks that key level, we're going to be out. Does that make sense? Where your stop loss would go?
Um,
This is looking
we'll,
good as of right now. It's respecting
we'll go
the
back, but while
level.
while we're on the topic of orders, where would you put your take profit?
So take profit here is, so first I'll cover, the first thing you're going to do is as soon as we sweep the lows and get a change, not a change of character, a break of structure to the downside. So as soon as we take, it would be now this low. This is a big gap, but normally it would be like, right through here. But as soon as price takes out the most recent low, which happens to be all the way down here, you move your stops to break even instantly. So as soon as you get a close below the most recent low, which happens to be right here on our example, you are going to be moving your stops to break even. Now, as far as TPs go, 1 to 4 is going to be where you're going to start looking to take some size off. But more times than not is I'm looking for it to take out lows. So if we look here, it's like key liquidity points. So we got to look where there's more fair value gaps in liquidity sitting. So like we see a big liquidity pull right here. Places consolidation to where you can see price respecting in the stock terms. Like that's pretty much it.
So
Consolidation
even
level.
even consolidation that I just previously had, like 20 minutes
Yeah.
ago.
Like I'd have
Okay.
it right through here because we can see price respecting this level multiple times. And we see a lot of liquidity sitting in this area due to these wicks. Like a lot of
Okay.
liquidity is laying right here in this area. And we're also going to sweep these lows. So my TPs on this, my like final TPs, would be a sweep of this low right here into this like liquidity pool. But I
Okay.
would say right now, since this huge displacement moves right here and the lows aren't till here, instead of taking my stop at break even, I'll also do that. But I'd probably take half inside of this liquidity that we're sitting
Okay.
in right here. Like
Okay.
I just look where key consolidation levels again in stock terms. Like that's what you guys look for. Does that make sense?
Yes.
So now that we know the strategy, there's indicators that you have to look at in order to take trades and in order to increase your win percentage. Because if you just traded every single one from what I just talked to you about, it's going to be the fastest way to blow your account. So you have to have a way of differentiating what a good setup is, what a bad setup is. Because again, like I just showed you, these setups happen all the time. I mean, you can even see it, just downtrend, break, retap, everything. So 3 indicators that I use is going to be, and I'll just name them for right now to make sure you guys have them, is the RSI indicator, which is the OG oscillator, and then the on chart and below the chart. So on chart shows it on the chart of where sell signals are, and then this is just the standard OG oscillator down here showing the RSI. So this purple line is the main one we're looking at, where this purple line goes, and you can see it in the overbought areas, you can see it in the oversold areas. And then this solid red and green is just showing money flow. So money flow coming in and out, what side is it heavier on than the other? So you can see right here, there's a lot more sell. There's a lot more buy here. Now it flipped to sell. Now it's kind of flipping to buy again. Does that make sense?
Mm-hmm.
I should actually put a stop it on this. Forgot.
But what do you? So no, like when
I'm
you're
gonna
looking
risk
at
it, though.
this, what are you thinking? Like when you look at the chart right now, like wouldn't you draw more fair value gaps based on those green candles because those are pretty decently
Down
sized
here,
candles? No.
yes, but you have to look. Is we're looking, we're already oversold. You see how much oversold we are up at these highs here. So I'm not drawing every single fair value gap. That's only for entry and then for TPs as well. Yes, you're going to see some resistance at these fair value gaps if we get a dump down to them. Like that's normal, but every fair value gap isn't respected. Not every fair value gap is. You know,
So
not
when it
every
comes to
model
your
is
indicators,
all.
what would make it more of an A plus setup to be willing to take?
So first thing you look for is the on chart, this sell signal from the RSI showing that look, we were very oversold and we crossed below the 50% level, you know, that 50 level,
Hmm.
showing that we're going to be reversing. So as soon as we get a sell signal, we don't take a trade unless we get one of these signals. So look, we got our sell signal. Oh, we look back, we got our change of character. We got the break of the trend line after we got that sell signal. We know that we can take this trade now
Okay.
if we look, because we got our sell signal. And we look back on the RSI, we can see that we were very overbought and we're starting to reverse that. Now, the next thing you got to look at is the ADX lines, which the thick line is going to be the 5-minute chart. The thin line is going to be the 1-minute chart. And all this is showing you is the strength of the current trend. So if both lines are above this 25 level, it's showing that whatever current trend we're in right now is very strong. It's not showing any signs of reversal, weakness, slowdown, pretty much. Now, if both are below this line, it's showing signs of like begging for a reversal. Especially if they're really far below, you know, below 20, let's say.
Do you have an
You know, like
example you
20.
could go back to and show like that was a banger trade?
Mm, yeah. Probably back another day.
If both are under 25, or
That's
if
golden.
both are above 25, don't even touch it.
Yeah, nope, you can't take a trade. If both are above, you can't even take a trade. So let me share that first, and then I'll jump to that question, Jason. But like,
Okay.
for trading conditions, both ADX lines are above 25. Fair value gap is positioned below the 0.5 Fibonacci retracement level, or a weak change of character with no clear imbalance. So if it changes the character without creating major fair value gaps, we don't want to touch that. We want to see clear displacement from the current trend, like this one right here. We can see once we broke this trend, we saw clear displacement showing fair value gaps. But let's say we just broke it, continued to chop here, and then chop down. There's no trade. We have to see clear displacement. Now, as far as rating goes, you have this rating guide right here. So first and foremost, I'm going to break this trade down because I think this is a good example. So you got your uptrend right here. You got your change of character right there. You got your sell signal. You got your fair value gap. You fib your level from the swing low to the swing, or the swing high to the swing low. You got your 50% level right at your fair value gap. Wait for price to tap into it. You set your risk above that fair value gap. And then you're writing this down. And then if you look at your OG oscillator, you can see currently we are oversold or overbought, flipping to that oversold level once we correct. Now, how to determine what an A plus, A setup, B, C setup is? You have this chart right here. So an A plus setup is 1 minute is under 20 on the ADX, 5-minute is under 25, entry is at the 50% Fibonacci level. That is A plus. Like, couldn't get any more perfect than that. A setup is 1 minute under the ADX 25, 5-minute under the ADX 25, or between 35 and 45. Entry is at the 50% Fibonacci level. B setup, 1 minute under 20, 5-minute under 25. Entry is beyond the 50% Fibonacci level. Okay. And then C, I mean, you don't even want to take that. Now, here's another trade example. Now, you can see this is an A setup, because if we look right here where our ADX lines are, 1 minute is below 25, ADX 5-minute is below 25 as well, but the 1 minute isn't below the 20, so that's making it the A setup. We can see right here we are in an uptrend. We get our sell signal. We get our change of character. We get our fair value gap right there, showing the price coming up, retapping into this fair value gap, because if we fib the swing high to the swing low, it's also at the 50% level, showing when price returns to this level, we reject off of it. So here's a B setup. We get our sell signal. We get our bearish fair value gap, which is changing character. Out of this trend, we're breaking this trend and getting a change of character. We draw our fib from the swing high to the swing low. We get our 50% level. That fair value gap is above the 50% level. Price taps into that level, and then we reverse. And then that's pretty much at 80x levels. You can also see 80x below 25, 5-minute below 25. Here's another one. You can see this trend line that we're in. We get our sell signal. Okay, doesn't mean we instantly broke. Right here, we change character. You can see the level. We also break the trend line.
Well, why did it change
Look.
character that low?
So change
Did
of
it-
character actually would be like right up here. Looking at it now, I meant I mixed up. Change of breaking the trend, more like.
Okay.
The change of character would be back here. It would be like right here.
I
From
wanted to
this
change
low.
the character to be go left. That drop.
This one?
Go left. No,
Right here.
more. Like way more. Like
It would
right.
be right here. That would be where the change of character actually is. I was
What
mixing
about
up
that one that
numbers.
it broke as low with the second touch point on the trend line? Why wouldn't that be the change of character?
Down here? This is
No,
the
to
trend
the
line.
left. Yeah, I know. This
right
in
here?
the middle, right there. Yeah. Why wouldn't that be
Oh
considered?
yeah, this is another one. This is another one. Right here, change of character. You're still getting them.
So now, when we talk about time frames, what time frames are best utilized? Like, do you look out in the 4-hour time frames, like to get a macro view
So
of
that's
the
what kind of
market?
AJ was asking. I don't know if you were here, but like at the beginning of the day, you can look at that, and I do every day. I'll do like my daily like 4-hour, 1-hour analysis to see where I think price wants to go. But at the end of the day, I can't marry that decision. You see what I'm saying?
Mm-hmm.
Like if I marry what I see here, like you just have to react. You know, that's the number one thing is we're looking at price on a 1-minute time frame and reacting to what price is giving us. Now, does it help knowing what Bitcoin's doing? Absolutely, but there's some days that'll turn against you and you'll take loss after loss trying to catch that move in your direction because you married what you thought it was going to do at the beginning of the day.
Mm-hmm.
So you have to
Yep.
be willing to adjust. But absolutely, every day I'll look at the 4-hour and the 1-hour and just mark up to see exactly, what am I seeing here? Hey, we had a fair value gap right here that we might want to see price come back up into, which we did right here. And we're currently seeing it right here. So is it smart to look for shorts somewhere inside this fair value gap on a smaller time frame? Absolutely. Because now you have double confluence. We're on a larger time frame. We're seeing price wanting to reject out of this area. Now,
Oh,
if we
did we
can see
just
it on
get a
a
sell
smaller time
signal?
frame,
Did we just get a sell signal
I don't
on?
look on for 1 minute. Yeah, we did on
Yeah.
a 1-minute time frame. So like this over here on Sol, like this is a beautiful trend right here. I mean, it's beautiful. So now what we want to do is, you see, we're getting the stack of the sell signals. This is already the
Mhm.
second one. Now we just want to see it change character with displacement, which we're kind of getting a little bit of it right here. You could say, let's say this broke it,
Displacement again?
where it's creating fair value gaps on its way, kind of like a para candles. It's just larger than the others. So for this instance, let's say this did break the trend, which it kind of did. Because one thing that I get iffy with sometimes is where the trend's at. Like you just got to kind of work around. There's going to be different trends, so it's finding the right trend. Because if you trade the wrong trend, like it won't do anything. But again, this would be right here where at the 50% level, you would have taken it and literally sniped it as of right now.
Well, where was the fair value gap though?
It would be right here, very tiny one.
Was there not a fair value gap above that?
Yeah, there is one as well, but it's just not at the 50% level. It's above it.
So if it goes up there, you would want to take it. It's better.
No, I wouldn't.
Well,
I don't like this one just because if you look, you have an underlying trend still here. So
okay.
at the end of the day, I want to see this probably break that trend. Because if not, it'll have some sort of resistance here that we could get another leg up, and then consolidation, and then a break. And if I was going to take this, I'd take it right at the one I just drew, this really tiny one. And then risk above this fair value gap here. Like right there. So that's what I would do, because that's the strategy. Is that it was right at the 50% level on this one.
Okay.
Does that make
Cool.
sense?
Thank you, bro. Yeah, I'm just now.
Does that make sense to you guys?
I'm
Daddy,
learning it piece by piece.
can we go upstairs?
Yeah, go upstairs, Bob.
Oh,
Stop is above the fair value gap.
No, I'm gonna risk a lot less. I think I'm gonna risk the 50% level.